Good morning, traders. How's everybody doing today? I wanted to hop on really quick because natural gas is moving, and that always gets everybody super excited. And I wanted to take a minute to chat about risk management. Once again, please take a minute to read the disclaimer on my page. There is never any intention from my making a video that should cause you to take a position in any equity, future, option, anything of that sort. You need to do your own due diligence and research. Uh, Base your trades on your own analysis if you do decide to trade. Trading is definitely not for everyone. And remember, people, most everyone loses their money in day trading. So, with all of that in mind, make sure that you're making the right financial decisions for your family. Um, Okay, so I've got the TPO profile pulled up here on natural gas, and I have not taken a position in /NG, but I did take a short position last night in /QG, which is the micro natural gas future. And I think that I have my stop loss set at 1.985. I didn't want to miss a giant slam down overnight, and I felt like the risk up to 1.985 was worthwhile given the smaller tick size in that future. Um, but so let's take a look here at the 1 year, 1 day chart. Okay, so we're right at the 50% level on the RSI, which that's an area I look to start going long sometimes. Once something crosses and holds above the 50% level, it can be a pretty good sign. I know this is a little bit messy, but that's just kind of how this TPO skews things on these larger charts. As you can see, we have an area of low order flow that we identified several weeks ago. So this has just kind of been sitting here hanging out on our chart in anticipation of natural gas pushing back up into this area at some point. Um, and let's take a look up here. So this was back in September, October, November, when we all had the natural gas hype. If you weren't familiar with natural gas and you didn't know much about the way supply and demand operated, a lot of traders got trapped up in this area because UGAZ just kept jumping and jumping and jumping. Every weekend there was a new gap. And I think it's really important for everyone to remember that time. It snapped all the way up to the top. So many people thought it was going to keep going up to 3, maybe 4, like it had in the previous year. Um, but once the institutions got the price up to this level and uh, sold all that they had to retail buyers and everyone else under the sun, they slammed that price right back down, and it has just continuously been on a decline since that point. And I am not saying that natural gas is going to go back down, but given the trend that natural gas has been on for the last several months, I wouldn't be surprised if it did take another dive or two back into sub 1.8, sub 1.7. Um, I've mentioned before, I like to look at super long-term charts just for the fun of it. Way out here in 1999, we are looking at 1.581. So if you don't think that the price of natural gas can go lower, you're absolutely wrong. These prices fluctuate based on supply and demand, and if these prices are too low, the manufacturers are just going to stop making natural gas. They will burn it off when they're in production for oil. Um, because it's just not worth it for them to produce and ship to market at super low prices. Um, Now, if you haven't done so yet, do take a minute to look at the future month contracts for natural gas. Um, I think that it's about 8 days out before we roll over to the new contract. I'm just opening up my app where I just look at the spreads. Yeah, so we've got 8 days left on this front month contract. And the following contract is currently trading at 1.959. So it's trading lower than where the current month is, and then the months following that are still trading above 2. But that doesn't mean those prices are going to stay there. So just pay really careful attention to any positions that you decide to take right now. So we've talked about this before, but prices tend to like to fill gaps. And we've had several gaps down in the last several months, several weeks even. And as you can see, this here was another area that the price gapped down from. When it crossed past 2 and snapped down to this Fibonacci area, it spent a little bit of time here above this as a support, but it hasn't revisited that area, hasn't refilled this gap until now. So could prices continue to climb for a brief period of time or even indefinitely? I don't know. Right now, what it looks like to me is that natural gas prices, I'm sorry, my dog is playing with his toy. Natural gas prices are trying to fill this gap here up to probably as high as 2.5, 2.05. We could also see this previous resistance level keep the price down, but we do still have these areas of low order fill, and there may be orders that are going to get filled up in that area. We just don't know. Let's get back down to the 5-minute time frame where I really like to trade. And I may go ahead and take the risk of going short here in the next little while. I'm going to keep my eye out on the price action. So we are filling orders in this area right now. There's nothing that I can see up above that, but I don't have any paid order flow data, which again is something that I'm considering taking on. I don't see a lot of likelihood for prices to go up much above this area and stay there for any significant amount of time, but it could. But what we have marked here are low order flow nodes in the range that we have been trading in. So keep your eyes on this, be really cautious. If you haven't taken the time to study accumulation and distribution cycles and zones on YouTube, just pop over to my trading education playlist. I've compiled a bunch of different videos from a variety of much smarter and more experienced traders than I am, and they go into detail talking about supply and demand zones and the accumulation and distribution cycle, where banks and institutions tend to buy, and then where they like to sell things to retail buyers. Let's just go back to risk management again. So a few of you know that in November I had actually not traded natural gas, and I thought that I had done a really good job of my technical analysis, and I was sure that the prices were going to be going up. There were a few people who were saying that it absolutely wasn't, that there was too much supply, but most of us who were new kind of ignored them and looked at the prices over the last couple of years and we're just positive that the prices would be driven higher due to the colder weather, and we didn't pay any attention to the oversupply. Um, Personally, my loss in November was a result of my taking a few really successful scalp trades early in the morning as prices approached 20, and I'm pretty sure went over 20. I think that I bought at 20.55, and you can take a look back at the charts on that day for UGAZ, which is what I was trading at that point. Um, the price hit that resistance level up at the top, and it slammed back down and did not stop. And what I should have done was to exit that scalp trade immediately, take my loss and walk away. But common amongst new traders and even more experienced traders is the difficulty in admitting that we're wrong. We like to be right. We're very competitive people typically, and I didn't want to take that loss. Now that loss would have been relatively small had I taken it on that day, or had I even waited until the reports that came a couple of days later and put in a limit order for the spike. That would have cleared me out of the position, possibly at break even, maybe even up a little bit or just down $100 or $200. But I decided to bag hold that trade. I was paralyzed, and I think I held it for a week or two. And you can take a look at that price progression and just look for yourself how much it's possible for people to have lost during that time. It is not a good idea to move your stops, change your plan midstream. Something that I've heard several more experienced traders say, and kind of a mantra that I've had for myself over the last little while, is that it will almost always cost you more money to get out later in a trade that has gone wrong than it will to cut yourself out right away. I actually did it on an oil position this morning. I decided to go long oil, and it almost immediately turned around, so I snapped out of there with a $10 loss. If you're not familiar with the way that /CL moves, it's $10 per penny that it ticks. And I took a couple of losses on oil last week because I was hoping and waiting for the price to swing back around in the direction of my trade, and it didn't happen. So I have a big focus this week on making sure that my entries are good, that my stop loss placement is good. And I know stop losses are an area that a lot of people have questions about. And what my current teacher is talking about is making sure that you're entering in a place that makes sense for your risk tolerance. And we need to look at the risk and the probability and the reward when we take a position. So Google the trader's equation if it's not something that you've taken a look at. But I am a big fan of early entries into trends, and that means that I am cutting back on the probability of the success of my trade, but the potential reward is substantially greater. And what that means is that I am looking to enter natural gas somewhere in this range, so between 1.955 and 1.96 for a short position. And I'm going to have to set my stop up here at 1.965 or maybe even 1.97. And I'm not taking that position right now and not encouraging you to do so. But that's just an example of how I would structure this trade if I do decide to enter right away. And that stop really doesn't change for me no matter where I enter, because what I'm looking at is the most recent significant major high or low when I'm taking a position. So if I wait to enter until price has given me a bit more confirmation, which is perfectly acceptable to do, it's not how I prefer to trade because it limits the potential reward, but it does mean that I lose more positions. But that's okay. That's just a part of the probability of trading. And I may go ahead and take a position here in just a minute. We'll see. That third candle starting to turn red, and that's what I like to see. I like to see a little bit more bearish action happening. But yeah, so no matter where you enter this trade, if you wait until it's down past the 9 EMA or until it breaks this support here, until it's cut through the VWAP or another indicator, depending on your trading style, in my opinion, and in the way that my current teacher is training me, you still need to keep that stop loss up here above the most recent high or low in order to get the most reward out of that position. And so the earlier you enter, the smaller the risk is, except that you have a lower probability, which means you're going to get stopped out more frequently. However, if it doesn't stop you out, your potential reward is substantially greater. If you wait to make your entry until the price has dropped a bit, your risk is greater, but the probability and the reward changes. Risk management, proper entries, that's really what I am paying most attention to right now, and it's emphasized in early education for traders quite frequently. I haven't heard a single educator not talk about risk management, but I don't think that it's something that beginning traders take seriously enough. It doesn't mean that you're wrong when the trade turns against you. It just means that the market went the other direction. It's not about you. And you're usually better off getting yourself out at a respectable time. And on that note, I am going to hop off and probably take this trade short. If I do take the trade short, I will go ahead and post a video a little bit later. I hope everybody has a fantastic day. Again, be really careful with your risk management. Please like this video if you haven't done so already, and please subscribe to my channel. I'm trying to post as I progress as a trader, and I hope that my journey will be helpful to you if you decide that you want to move further forward in your trading journey. All right, everybody, have a fantastic day, and I hope to chat with you again soon. Bye.